What are some rules of thumb when valuing or pricing an accounting firm?
Rules of thumb for valuing or pricing an accounting firm. I actually have got about 10 pages of notes on this. It's quite convoluted and complex, so please don't take any one of these as that's the way to do your firm if you in fact own an accounting firm and you're trying to place a value on it. Three rules of thumb are typically a percentage of annual revenue. A percentage between 0.75 to 1.25 of annual revenue is one of the general, and I put this in quotes, very general rules of thumb. So if in fact your accounting firm was doing $1 million in annual revenue, a rule of thumb would be $750,000 to $1.250 million. Another rule of thumb, again depending upon the characteristics of the practice, would be a multiple times net monthly sales as opposed to using annual. And you might look at an average monthly revenue or sale and use a multiplier anywhere from 9 to 15. Now, by the way, I'm taking this from Tom West's book on business valuation, which is very, very helpful. But again, this is not cast in stone. So if in fact I mentioned earlier a $1 million accounting firm, let's say as an example, your accounting firm averages $20,000 per month billing. 9 times 20 to 15 times 20 could be the value of that. As an appraiser, I use these rules of thumb all the time. I use a much more complicated set of software that's used by Fortune 500 companies for valuation, but at the end of the day, I come back to these same rules of thumb as a gut check. The third rule of thumb is to take 2 to 5 times the seller's SDE. SDE stands for seller's discretionary earnings. So let's say you own the accounting firm, and let's say you take out a $100,000 salary. There's a $50,000 profit at the end of the year that's distributed to you, and you also take out $50,000 in perks. That would give you a $200,000 SDE, seller's discretionary earnings. You can take that SDE, $200,000, times 2, 3, 4, or 5. That would be a range. Again, as a business valuation pro or expert for ProBiz Consulting, what I do is I look at all three of these rules of thumb and try to come up with something that makes sense, that none of them are too far out of whack. As an example, if I use the multiplier of 1.25 and then I use the same ratio of 2 to 5 times, if they came way, way apart, then I know that something is wrong with the valuation. So those are three simple rules of thumb, in particular for accounting firms, not the same for other kinds of companies.